Hello, friends. Welcome to Akulmach Live. And in the live stream today, we are going to discuss about a very important lesson that all of us can learn from the rise and fall of BYJU's. And before the fall actually started, BYJU's had clocked $22 billion of turnover. It was huge, humongous. One edtech giant coming from India and competing with the global entities and amassing $22 billion. But then the downfall started. And for this discussion, I will be joined by Mr. Basant Umar, very senior person of our industry, and we will take his views about the rise and fall of BYJU's. So without further ado, let me welcome Basant to this live stream. Hello, Basant. How are you doing today? And welcome to Akulmach.
Hi, CK. I'm doing very well. Thank you. Good to be back again.
So, Basant, as we know that BYJU's is going through a lot of legal issues and financial issues at this point in time, and the topic of our discussion today is about lessons that we can all learn from the rise and fall of BYJU's. So, your opening comments, very briefly, if you can start.
The problem with the startups is that they start running after the valuations. They don't look at the profitability and they forget what is the mission and vision once they are in that race, to get more funds and keep growing and growing. It's more of a greed if you really get deeper into this, and the business model is completely flawed. We will come to that as well. You got to be profitable. You can't keep playing this game.
Absolutely. I think you have set the tone with your opening comments. Let us start with our first question that we've got from our audience. And the first question is, can you describe the initial vision and mission of BYJU's when it was founded, and how did it evolve over time? So, brief history of BYJU's and why it looked so promising. Uh, so you can tell from your point of view.
I'll start. The beginning of the gentleman. The Ravindran Baiju. His parents were teachers. Everyone knows that, both mother and father. And this guy was good at maths and probably was good at physical activities, sports, etc., etc. This guy, he started. Started moving and joined engineering college. He was doing well. He had a knack, he understood concepts very well. So his principles and everything was very clear of explaining to students. So how it started was people started taking help from him, just, to see, that if they could get through. And certain friends of his took his help and they cleared certain exams. As this is how it started. It was way too long back, 2011 or before that, rather, something of that kind. So then he saw, said, yeah, okay, I can do more. So they cracked certain exams, they passed, they told others. So this guy started moving, and he said, okay, why don't I start teaching? So he started teaching, people slowly. And the way he grew was like he had concepts. He was a brilliant teacher. I mean, let's understand from that perspective. Very like-minded, able teacher, a professor who teaches concepts, not just the whole story of mugging and releasing it just to get the marks. So his idea was good, when he started initially, that I want to change the system, the setup, and I want people to do better, the students to do better. This is where, things started moving for him. And when students were all tuning into him, finally, some gentleman came, and we'll talk about that later. And he started investing. He pushed him to go to digital, and the story began with the first 50 crore investment by Manipal Group, owner. And the saga continues, and it reached a place where there is no looking back. The guy is finished. The valuation has gone 99% down. I think there's just about $200 million valuation, and he's got cases piled up on him, tons of them. $1.5 billion loans. 1.2 is the billion loan, term loan that he's supposed to clear, plus the backlogs of everything. He's not paid anything. TDS, this, that, salaries, PF, name it. There. A brilliant idea, brilliant guy, brilliant concept. pushed into things which he just couldn't control. Too grew too fast, too early, couldn't handle.
Yes, and to that, I would like to add that when he started in a very humble beginning, he was actually teaching in a college room, and he was given the college room. But then his popularity grew so much that they were actually teaching from a stadium before they started a company. So I think this was huge. Let's go to the next question that we have on this subject, and that is, what were some of the key strategies that contributed to Baiju's rapid growth and success in the early years? We know that obviously he is a very strategic mind. He's a very sharp person. So, what really propelled him to such great height, where he actually clocked $22 billion in turnover before the fall started?
This is where I was trying to come in. I was telling you how he started with the Manipal Group owner, giving him 50 crore loan or investment in his business, and telling him that you go digital, basically online. And 2012 it was, probably, if I'm correct. 2015 he launched the app, the learning app, right? And then he created everything in that, from kindergarten to the graduate or whatever the examination that someone needs to pass. He was growing way too fast. He started getting investment from Sequoia Capital, as then from Zuckerberg, kind of thing. And then when he saw the kind of money which was coming in, uh, he started buying out. His strategy was simple: go and capture the market, because there was a lack of it. What helped him was COVID. The COVID expanded every edtech. It's not just him. The edtech saga started during COVID pandemic, when everything shut down. So he saw that that massive boost that every edtech got was through this, and the opportunity everyone picked up, they rushed in. And even the investors were like kind of FOMO kind of thing, that we will miss out on the investment story. So they started pumping in money. If I remember, 2 years, probably $6.5 billion were invested into edtech. Half of that went to BYJU's. So it was like, we can't say that, yeah, the BYJU's became a jewel in the crown kind of story, that one which took all the hype. This guy started raking money in the bank, and he said, okay, let's go further, because the investors were pushing. They said, okay, let's get the numbers now. Now the whole story is, like, when I said the model was flawed from the beginning, I will explain that as well. But when the numbers started kicking in and getting billions of dollars, he said, okay, let's hire Shah Rukh Khan, Messi, sponsor Indian Cricket League, Indian cricket teams, BCCI. They're moving to World Cup, also football sponsoring. And then he started splashing money, buying assets left, right, at huge valuations at that time, because the money was there and the market was there. They thought, the whole idea was that probably that online will continue forever, right? So that is the concept, where he invested probably $2.5 billion in buying Akash, White Hat, K2, and a couple of more. One in US, he wanted to penetrate. He bought certain assets there, certain companies there, and investors were pumping in. I said, fine, let's keep on doing it. Now, see, this all stopped. When the COVID stopped, they thought that this will continue. It did not, and the market lost its value there. Then it was 2022, and the investors saw it. The numbers were not coming in, and the problem started beginning. So he reached 3 times the valuation increase only because of pandemic. Whatever his he was doing before, it was okay. From that perspective, the growth was fine. It was not like a hyper growth which was happening, and people could handle a growth to a certain extent, create a value, be profitable, and then move from there. So this is where things went for a toss. Then, to compensate for all that, he took a term loan also. I thought maybe at a higher interest rate and all that. With the funds drying up, all the people, and the Fed, US Fed also did that. They wanted people to move in, so they made some changes, and money moved into US to Fed reserves. People started buying there. This guy lost all the funds which are coming in. The money stopped, and the problem started. So his strategy, good initially. As soon as the investors start kicking in, you and I understand what happens there. They want more and more revenue. They want to exit. So it happened initially. Certain came in, certain exit. Certain got certain exit, and they thought probably this saga will continue. And it just did not continue. From 2022 onwards, it ended then and there only. They all understood it's not going to work.
Well, Basanji, as you rightly pointed out, that the service offerings of BYJU's was from very small to very large, because after the acquisition of Akash, they got into the training market as well, because Akash was number one, very large in the training arena, and they also started tuition type courses for the school also, 8th standard, 9th standard, and the intention was to basically replace, sort of start an online school, which never happened. So do you think, as part of a strategy, since government did not allow them to start an online school, that is where they did not project their numbers appropriately? What do you think happened here, very briefly?
Well, I think you should look at how revenues were getting generated. People don't know that. I don't know where people are understanding the business model there. If you look at the revenues, and the split of that revenue is very important, you will be surprised that 80% of the revenue was coming from the sale of tablets. Did you know that? No, you won't know that. 20% was only from the courses, the true essence of the business model. So please understand, things started going wrong way bad from the beginning, and the way they started pushing. And see, once investor comes in, what is the job? We need money, we need numbers. Money is, we are pushing in. I give you $5 billion, get me numbers now. Because that guy needs to exit. So till the valuation goes beyond, so that he can exit. So the whole idea was, as I said, it's pretty flawed. Now you will be surprised with what I told you right now, that the 80% of revenue was from tablet sales. Please understand that 20% was from the courses that they were selling. Can you imagine that kind of condition? Now, before this, now another thing. Now, when investors kicked in, they started pushing in, get the sales. Okay, so they hired thousands of people. And how the sales were being done? The minimum pricing was $50, $60 something. For India market, it was just not ready. It's impossible that people will pay that kind of money to start with to see. So how did they start? Again, ads on TV, Shah Rukh Khan talking, right? You see them, and smartly you understand that the pull. Then these guys will, the parents will see and download the app. Fair enough. Then the online consultation start. Then they said, okay, we'll have a offline kind of thing, and we'll consult. And then he reaches their home, the sales guy. He talks to the kid. He touches the kid, his head, his mind, and he talks about aspirations and blah blah. Shows him the tablet, and he asks him questions. Can you answer? He couldn't answer question. Typical question that, if you will imagine, I'll ask you that one question that they normally ask in everybody, that how many points are there in a circle? What do you think? How many points are there in a circle? Can you ask this to a child?
Well, child may not have that imagination. I mean, especially the junior school may not have that imagination, because they will say that circles will have um, n number of sides, or some smart dude will say, okay, no sides at all.
They're talking about the points in a circle. The typical question is like, how many points are there? How many points are there in a circle? How many points can you do? So, I mean, it's hard for a student to fathom that. It's so easily at that moment, when you are under pressure and blah, blah, blah going on. And the answer was always what he would pull out, a fine-tuned, of Ravindran's, one of his courses, and he'll show him and say, it's like unlimited kind of thing. There are infinite number of points. One, you look at that now. Please check. You haven't, I don't know if you've seen all that or not. I have seen, I've gone through, I've read the stories. And then they'll start asking, they'll tell parents, see, if your child can't answer this question, can he clear boards? Can he clear those exams? And if that also doesn't work, then the fine, nail in the coffin was, they will ask a couple of more questions to the kid, formed questions, and those questions the kid won't answer. Then they'll show him slides, certain, educative slides. He can answer those. As soon as the parent sees this, and he says, oh my God, he just got it. He understood, things, because kids grasp pretty fast, it. So the whole thing was, psych was created, and it was fear. It was like a guilt in the parents' heads that, if my child is not able to do it, what should I do? And by the time kid also goes nuts. He said, I want to buy this tablet. It's not about education. Kid likes that. He said, I see a good thing here. You will get this from thousands and thousands of parents who will tell you they fell into a trap, they didn't have money, they took the loans. And now Big thing. The loans were also given by BYJU's, and then can you imagine a company getting loans to parents, and then taking that as their revenues? That the money that come to me is a revenue. This is why they fudge their numbers. The story is way too bad. If you get deeper and deeper, you will realize that they did not give for 3 years. They did not declare the financials to the world also. So that is why their auditor quit. There were no numbers from 2022 onwards. They did not give to anyone. It's not that only. False representations, fudging everywhere, data not being given just because they can't get the sales. And the policy was 50% discounts or full refund. No, full refund, no questions asked. This is how they were trapping these parents, and it just went too bad. They couldn't refund. There was no discounts. There were no promises. Abusive culture, very toxic. They salespeople, if you talk everything, this has been way too flawed because they went too high, too fast, couldn't handle the growth, and they can't handle it. And buying assets at like double the cost, and when everything crashes after COVID, everything went down. Nobody touches them, and he's selling assets at half the prices. So he bought certain company $1 billion in US, which he sold for 500 million. I mean, do you think he can survive? No. This crashed down, and what I told you was 80% from the tablet. He became a hardware company. What the hell was he doing? We don't know. As I said, brilliant chap, brilliant concept, brilliant idea. When you pump in investors, then when you start pushing it far beyond your capability to handle, this is what happens. And it has finished, has killed a brilliant industry. And now people are wary of touching it, except Sir Few. Physics Wala is one of the ones which have been running fine now. Akash is still okay, rest are dead. So this is where it is. This is how it went, and this is where it went wrong. They've hidden money also. If you understand the $553 million they've hidden at the term loan somewhere, and there's a case in US. His brother has a case filed on him. In US also cases filed. $10,000 per day he has to pay till he finds the money or helps them to locate the money. The US lawyers have asked for this. We can't represent them. We don't want to. We cannot represent them. Lawyers don't want to touch them. India industry, a lot of cases, FEMA violation, besides not paying, the TDS, and this is this. As I said, brilliant company, brilliant man, brilliant thought process, brilliant idea. I think it went wrong when they started pushing in for the numbers instead of getting core into the business of serving people. The idea was flawed. If you talk about mission and vision, there was nothing in their mission. You know what mission is, you understand, or a vision. It has to be some societal aspect which you want to, do in the numbers format. It's not that I want to serve the community. Everybody wants to do that. How, what number, by what period, and how you're going to do it. I don't know why people, and there was a very nice book written by some Shah guy. There's an editor who wrote a book, I think, edtech, he took for a ride. There's a book on that, the BYJU saga, how he took edtech industry for a ride, and he's explained that very beautifully in that book also. What exactly went wrong there?
Well, I fully agree with you when you say brilliant idea, because his core competencies were the math education and the tips and tricks around how do you circumvent the difficult aspects of maths. And I think he would have stuck to that, he would have been more successful. But I think he digressed and then he did many things. So let's move on to the next question, Basanji, which is in a way you have actually described already. What are the main factors that led to the financial crisis? It's basically what you're saying is that he did not follow the core mantra of his whole strategy. His mission and vision were thrown out of the window. The way he started was not the way he continued after he got the funding, and then he went on acquisitions and all that, and he did not control the cash flow. I think that is what you have already told. So let's move on to the next question, which is, how do BYJU's ambitious expansion plan impact its financial stability and the operational efficiency? I think this is one important lessons that all of us can learn, especially people are starting up now in India. It is now becoming the second largest startup destination. I think this is a very good question for training all the startup guys. Over to you, Basan.
See, I've already answered, but you must understand. It's the whole game was you got to become profitable before you think of expanding. Please understand the whole game. You cannot be running on debt when you don't know what your market looks like or how it's going to look like over a period of, let's say, 5 or 10 years. When you are playing in that kind of volume of billions of dollars, so it has killed. There was no money. See, please understand, it was a boost given by a disaster, a pandemic, which created the market for all edtech, and it's just unbelievable. I don't know why did this. They could have continued in a far better way, going slowly, and staying core to the business, not getting into the story of, as I said, where is the money coming from? Tablet. I mean, please, that's not who you were. So the whole idea was you were not focusing on the core because you needed numbers. The numbers would come quickly from the product rather than service. It's hard to service. You know that I'm in service industry. It's not easy. It's way too hard to service and sustain those levels, then sell a product and say thank you so much. No, it did not work out. So expansion, you should not expand till you are profitable where you are doing what, and you must see your market. Don't keep on hiring, and even if you get funding, I don't know why you should go for funding in that sense first, unless you have a profitable model. Market exploded because of COVID. Otherwise, people would not have invested. I can assure you, had COVID not come, it wouldn't have gone to this stage. So everything, like the things aligning, misaligning, both things happened. Things aligned, moved to $22 billion. Things misaligned, and he's down. COVID finished. Students went back to schools because parents saw the kids were like more interested into looking at other aspects, not studying. They're more busy into other online things, and there's no social, touch that is there. Everything moved back, and it killed. So the thought process, I don't know. As I said, he was pushed far beyond limits as a teacher, and he just couldn't handle it. So please don't do that. Become profitable in a small scale, and then expand slowly. Where is the need to expand like nuts, and try and capture? I think it was all about getting exits for these investors. I pump in 5. You push this, company to 10 billion, then we sell, and I exit with X kind of revenues. The whole story was that, and everybody thinks it's so. In every startup, they are expecting this kind of thing, that I want to exit. And please, come on, what's wrong?
So, with the acquisition of Akash, I think that was a very good move. That was the first good move, and they spent $2 billion. So, from your point of view, if I may ask, if they had continued the acquisition instead of acquiring the online business, they would have acquired some universities, either in India or overseas. Was that a good move for them? I mean, apart from going wrong on the strategy itself, but acquisition of physical university was better, or acquiring various online business was better? I mean, that did not work anyway. But if they had continued acquiring the physical hardcore education business, do you think situation would have been different? What is your opinion?
Yes, see, please, he should have stuck to, slow pace of growth, and becoming profitable. See, his revenues were 2,000 crore and his losses were 4,000 crores. Now, can you sustain something like this? I am not understanding how could someone think that they could carry on a saga like this forever. It doesn't work. You know, and I know it. His idea, they were never profitable. Please understand, always billions of dollars of losses, revenues, a billion, losses of 2 billion. I mean, how do you think what was happening there? It was just a game being played by investors on somebody's, core kind of thing, and the market that India had, of course, and they thought that they could move to Dubai and overseas. No, people are not too interested. It was India, the story, and they saw the push from the government and the COVID and etc. Buying Akash is okay. Today, Akash is still profitable. Other companies are dead. Others, Akash is still fine asset. Online asset where, you touch the students day-to-day basis, that would have been far better. And going slowly, he paid too much money for assets which had no value.
And that is why people say that, you should always engage with the business guys who can think strategically and think long term, and don't do everything with your own hand. I think that is one big lesson. So now let's move on to the next question. That is about the lesson that the edtech and the startup can learn from BYJU's journey in terms of success and in terms of challenge. I think I can add, before you answer, from my side, is that you have to be not hungry for diversification, but I think the strategic diversification is very important. That is one thing that I learned from BYJU saga. But for a much holistic answer, over to you.
No, CK, it was about sticking to your core values. Again, they had no value. Please understand their mission and vision. If you look at that, there is nothing there. It's just a vague kind of thing, and they did not stuck. He couldn't have actually, because he was pushed into a super fast train, and where he had nothing, no control. All he needed to was to get passengers in and keep pushing them in. So this is where things are going on. So startups, everyone knows. Startups also understand that it's not easy. Anybody who's doing business, you, I, or anyone doing worth his salt knows that it is very hard to sustain a service or any product industry where you have to give service and over a period of time keep sustaining those levels and then expand slowly expand yourself. Where is the rush? I don't understand. Why do you want to do that? There are challenges every day. You and I face challenges. For me, certain markets close down, certain telecom routes to my calling and my this that shuts down. But then I have other ways of dealing. The whole idea is to stay profitable. Number one, do not get into debt. Number two, very simple. Number three, expand slowly, diversify a bit. Once you know you're stable and the business is on auto kind of mode where it's generating, it's a repeated customer. It's not about order. It's all about reorder that helps somebody. One time anyone will buy from you, but will he buy from second time at the same cost or at a higher cost? This is where you add value and you sell more to the customer. So for any startup, it's about reorder. Please understand that, and the value that you keep creating constantly in the business, and you have to have impacting a community where you're helping people. It's just I don't know. It's so simple from you. If you ask me, I mean, I've been serving customers, and the whole idea is to serve them well. And they know the name, they know the brand, and they know the guy. So they come back. They will go and hunt. They reduce the rate. They will talk to certain kind of people, check that out. It doesn't work out well for them. They come back. I said, yeah, fine. And this is how it plays. So whether a small or a large game, then you have to stay grounded. You can't fly, with the money that investors pump in, or the very large ones, especially the marquee ones. They will kill you for that. All they want is their exits. And where you see Shark Tanks and all that, if you've ever seen those, the only thing in their head is, I want a better exit, else I want guarantee of my money that I'm giving you. And there's no guarantee of an exit. No one knows when the exit is going to come. So they'll suck blood out of you.
Yes, absolutely right. And when it comes to any organization, it is like a journey which is at least 5 years. Even in today's business time, it is at least 5 years, because your greenfield cannot be 100%. It has to be 20% or at the most 30%. Your core business, as you rightly mentioned, your reorder should be at least 70 to 80% of your turnover, which is rightly said. It's a very good learning that we get from BYJU's. They grew without any mission, as you pointed out absolutely correctly. So any last thought you want to add here for the benefit of our viewers?
No, I see. It's whole. The thing is, you can do anything in today's world. You everything is available with AI coming in. Please get a core strength, get a core skill set ready, and just stay on course and continue expanding slowly. Start individually, or even if you have funds, then do a little bit. Start slow. Make value. The whole point is, please easy down. Don't run after money. It's not going to help. Once you start serving well, the money comes on its own, and then you can keep adding value, looking at how technology is changing, how market is changing.
So, Basant, thank you so much for joining us live today. And it's an afternoon. You found time. Appreciate. And thank you so much for sharing all of this knowledge for the benefit of our startup and business guys who are watching our channel. Thank you so much.
Thanks, man. Bye-bye.
So, friends, we had a very interesting discussion with Vasant Tomar. And one thing we must remember, that whenever we are doing business, we must look at our balance sheet very closely. We must look at the tested, tried methods of establishing business. There are no shortcuts in life. Even if you get a lot of funding, how you're going to basically generate money from that funding, that you must think before you take the money from any investor. Very, very strong learning from this incident that don't take money just because it is available. Be very prudent about it, because if the money is being shown to you, you have to return it one day, and that day will not be very far. So I think with this we can end our live stream. If you have any questions, any suggestions, feel free to send it across. And thanks for watching me live. I will catch you again in the next one.